Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Thursday, January 19th, 2023, and the market reopened last night at 5 and we proceeded to sell off quite orderly, getting into the US hours, and did get a little bit of a pop right after the cash open and we sold off to new lows. But after we established our low for the day, the market had a nice rally. It was almost a 40-point rally. I think the low was like what was that, 1 3/4. We got back up to around just around the 40 area, 40 1/4. It's about 39 points. So that was a nice rally, and I want to talk about some of the order flow that you could have taken advantage of, so that when you're looking at a footprint chart, you got some clues on what you can focus on and add to your trading. So before I begin, if you haven't already, be sure to subscribe to the channel, hit that subscribe button below, and if you find you get some value out of this video, be sure to like the video. All right, so let's take a look at the footprints. Okay, so one of the things that I use in my own trading, one of the things that is very important to me is understanding where value is in a bar. All right, now if you've ever looked at volume profile or market profile and you've done any analysis in those areas, you understand the term value area, right? And a value area, how most people look at it, is the day's value area, where 70% of the day's volume transacts. Now with order flow, you're looking at volume anyway, so why not take it as sort of as micro as you can, and look at it on a bar by bar basis. Especially a lot of these contracts trade very nice volume. I mean, E-minis are trading thousands of contracts in a minute. Right, this is E-minis. This is 1101 trades 6,700 contracts. 1102 6,860 contracts. Even some of these smaller bars, 1,800 contracts. That's good. That's decent volume. You could use that in your analysis. Now, for me, when I define a value area, it is where 70% of the volume in the bar transact. Just if I was using a volume profile for the day, I would still use 70%. Right? I'm not going to deviate it and try to fine point it. Now, some people say, well, you should really use 68%. Okay, honestly, the difference between 68% and 70%, on a bar by bar basis, is pretty much going to be exactly the same. Once in a while, you may tick up to one more price level or remove one more price level, but it really varies. Now, on the Orderflows Trader software, okay, if you're using my software, you'll find this very informative and very eye-opening if you're not already using it. I talk about this in my weekly sessions for our Orderflow users. But what I like to look for is value areas that are abandoned, that are not traded back into in the next bar. Okay, because I'm going to look at these as, one, I can look at them as support or resistance. Support if it's coming on an up bar on an up move, or resistance if it's coming in on a red bar on a down move. And there are little nuances, right? You're not going to just indiscriminately trade each and every one. Ideally you'd be looking for them at sort of as the market is making a turn or a move, because at the end of the day, you don't want to just take value areas that are abandoned in the middle of sideways activity, right? No matter what system or method or whatever you're trading, if the market is not moving, trading sideways, it's not going to be very effective. So that being said, okay, so you can see the value areas, right, in each bar. It's this big green box in the bar. That's not the actual candle. The candle's inside. But I can see how the values are forming. Value is migrating higher. Value areas, highs and lows of each green candle, it's what you expect to see is it going higher, right? Just as the market is moving down, value areas are moving lower. You're seeing the value area lows of red candles. Ideally, you expect them to be migrating lower. I mean, that's basic, right? That's not like some hidden rhythm of the market. That's what you expect to see on moves. Now, where it gets a little bit interesting, sometimes you're going to have gaps in the value areas, right? There's no gaps between the two bars, but the value areas of the bars, you do see gaps, right? And there's patterns you can discern from there. And it's interesting because, people will say, well, isn't the market a random walk? Well, I don't think it is. I mean, in general, overall, yeah, maybe it's pretty random, but on a smaller scale, people are buying and selling based on their perception of what they think the market is valued at, right? And it doesn't matter whether there's E-minis or crude oil or euro currency or soybean meal or palm oil or, tin or copper. People that trade it have their perception of value. And when value starts to move in their minds, that's what they're basing their trading decisions on. So if I start to see, gaps in value in a direction, to me, that's solid information that I can use. All right, so getting back to abandoned value areas. Now, if you've ever studied market profile, volume profile, you're probably familiar with the term naked POC or virgin POC. I could call it naked POC. I could call it virgin POC, or naked value area or virgin value area. But I prefer the term abandoned because it's being abandoned. And I don't want my kids overhearing me or my wife overhearing me think I'm talking about some porno stuff. But I just prefer the term abandoned. It's just easier for me to say. Now, so what I'm looking for, right, is a bar where you have a value area like here, and the next bar doesn't trade back into that, whether it's an up bar or a down bar. Okay, but you can see how pretty much every bar, most bars, I don't know what the percentage is, 95%, gets retraced back into the value area, gets retraced back into. And sometimes it gets accepted, sometimes it gets rejected. Obviously, a clear sign of rejection of a value area is when it doesn't trade back into it. So that's important information, right? It's information that you can use and take trades off of, right? You could wrap this around, your own trading strategy. So on the Orderflows Trader, I've seen a few softwares out there that have copied this concept actually in their software. Of course, they don't use it because they don't trade. They just make software by copying other people's ideas. Change it to until tested. Okay. That's what I don't get. I see a lot of people copying software out there. But it's like, because my software has been out there since 2015, and a lot of my stuff's been added to other people's software. Okay, fine, but it's like you're just adding it for the sake of adding it because I have it. It's like, be original, create your own things. There are some softwares out there that are original, order flow stuff that are also brilliant. Okay, I'm not saying mine is the best, but it suits me because this is how I trade. Everything you see in here is in here because this is what I wanted to put in based on my own analysis. All right, so enough of that. You can see here, right, cash opened 830, rallied up from 19 all the way up to around the 30s, 33 and a half, 33 and 3/4, started coming off, right, gap in value. Then you see this value area that's abandoned here. But again, you don't know it's going to be abandoned until this bar closes here, the bar afterwards that it doesn't trade back into. Okay, so gap and go, right? Gap here, go with it. You got the value area that's been abandoned, and again, it gives you a nice, not a monster move, but gives you a nice 5 quick points. Then it starts to go sideways. Then you're going sideways in here. You get one here, a bullish one. Now again, I'm looking at this as potential resistance now. Okay. This could be potential support. You can see how it trades right up to the value area high. All right. Now be careful, right? When you're trading these, don't just trade everything indiscriminately. Like, oh my gosh, there's a abandoned value area here. I got to get long. Without giving away a secret sauce, basically think about it. Okay. Okay. You have your abandoned value area here, right? Rather than just say, okay, I've got my bullish value area that's being abandoned in the next bar, I got to get long. Well, you still got to read what's happening in the market, right? What's this next bar doing? Well, it's opened up down here and it's trading back into the value. It's accepting this previous value as opposed to over here, right? Okay, it was abandoned. The next bar opens up, kind of makes an attempt back up towards it, but then, again, it makes a move down. This one is going to be, a much better trade to take than this one where the market opened up, rallied up, and then it's closing right on the value. It's like you can just see it coming right back into it, right? Even though technically it's an abandoned value area here, the way the price is moving, it's coming right back into it, right? So it's not going to be a very effective trade to just take blindly. You still got to think about what you're looking at rather than just take them all indiscriminately, blindly, just like here, right? This is a nice one. Starts moving up, okay, right? You got your abandoned value area here. Next bar is higher, then the next bar is starting to go higher, right? You got a nice little move there. But let's take a look, you know, a little bit later, right, to when we hit that low of the day, okay? And you can see how this market it's moving in those directions, okay? But I want to talk about the low of the day here, okay? So this was the low of the day around just before 11 o'clock. And it was quite interesting because, you know, big selling imbalance coming into, stack selling imbalance coming into the low, make that new low. There's some big volume coming in here, 3902 on the offer side, you know, 1100. And again, I look at Twitter, oh my gosh, you know, if we get back into the 3800s, you know, there's going to be a lot of fear. Well, yeah, no shit. I mean, we were just trading a couple days ago, 4,000, you know, and we're losing already 150, close to 140 points. Yeah, I mean, at some point, people are going to chuck it in. I mean, it doesn't take a rocket scientist to understand that. But anyway, so we make this low at 1 3/4, and we start going up, and then go sideways, right? Now, what do we got? A value area here that's abandoned, followed by another one. So you got two in a row, and you got gap here between this value area, gap between this value area. That's a strong sign because you don't really get a lot of two value areas abandoned in a row. Okay, I'll just say that right now because I've done the tests on it, and I know it's quite strong. And really the sign to get in off of is this bar right here. You don't even need to wait over here. You can see it came back in and got within the value area high. This is why I talk about these areas. You know, if they're bullish ones, are going to be your support. If they're bearish ones, they're going to be resistance, right? And it just comes right to that top. 39.10 is actually, this is the price where we traded back into, you know, within a tick of the high of, value area high of 9 3/4 and went back up, right? And we just see it just comes right back down, sort of holding. And you'll notice these value areas, they're all traded back into, right? Then you get a bearish one here, okay? Well, I know I have this support here, back here at 9 3/4, right? In here down to 7.5, and I've got the one from earlier as well to hide behind. Okay, so even I got the bearish one here. You know, maybe, you know, you might want to take a short, but again, yeah, I know I'm going to run into support down in here. So even if I take that, you know, what capacity is there for a trade? You know, getting short around, you know, in this bar, maybe 11, you know, or 12 even. Well, this is 12. For a move down, you know, it could stall around 08 potentially. Then you got another support-ish area here. So again, I mean, even if you take it, you know, this is one where it's like, well, you know, I don't know. It's not one that I'd be more interested to watch if, you know, I'd still be more interested in the long because the long is a little bit stronger than what I'm seeing in here. And this one is sort of coming after a long period of sideways activity. And then it starts turning back, right? It comes into that support area. You end up with this doji right here. And it starts ticking back up, okay? And what you get another abandoned value area here. So even if you got short in here, you know, when it starts coming back up, you know, maybe, you know, you're like, ah, shit, you know, I should have kept my original long. Maybe you got long again, or maybe just, you know, said screw it and covered it, or, you know, maybe get stopped out up here. I don't know. But once it gets on the other side of this previous resistance, and now you've got a new support area, it's a sign for you to get long, you know, back in here, right? Once this bar closes, you get long here at 16, that area. And it shoots right up into the 23s, goes sideways a bit, get another bullish sign, and then it's just sort of off to the races. It's just moving higher and higher, right? What was interesting about this is you had that one zone and it came right back into it, and it left you with another zone, right? Another abandoned value area to move higher, okay? And you can see that's the 1 o'clock here, and it just sort of holds. It's kind of holding, right? If you were to even, you know, I don't want to say you could overlap these two, but, you know, if you were here to here, this area, right? I mean, if you were sort of crunch those bars together, you see it comes right back into this area in here before it launches back up again up into the 40s, right? Right here, I'll say 40s, but, you know, 40 literally. Okay, And then, you're getting some bearish ones in here, a small move here. This one, you would have taken a loss on the chin. But this one, you could have got back what you lost here. And then, you're sort of coming into the close of the day, 2:30. It's quite, we saw a big squaring up on today's close. A lot of volume went through on today's close. I think it was ahead of options expiration tomorrow. People just want to flatten their book. But the point is, look for these value areas that get abandoned, right? So if you're not using value areas, I don't know. I've been using order flow for over a decade now, and it's just like people say, "Oh, you don't need order flow. That's overkill. There's nothing valuable in it." Well, okay, fine. If you don't need it, it's just like, well, do you need a Porsche or do you need a Kia, right? They both provide transportation, but you want a nicer car or not? That's why I always say, the information is there. It's available to you as a trader. Why not use it? Right? You can see there's that zone from earlier. Market came right back to that value area high here. Literally one tick above it. And it, got 10-point move off of that. You can't make this stuff up sometimes. If you want to use market generated information, go do some research into value areas, right? If you get my software and you only use one part of it, use the value areas, right? It's very useful and can help you in your trading, help you understand what's happening in the market. Maybe tomorrow I'll talk about gaps in the value areas, okay? Because back in the 80s and 90s, back in the 70s and 80s, there was a lot of studies done on gap analysis. And now with the markets basically trading around the clock, other than markets like, hogs and cattle that close and don't have an overnight session, these markets, you don't really talk about gaps that much, right? Because, there's always the evenings, S&Ps pretty much trade around the clock except for that 1 hour. Currencies, same thing. Even the grains, even though they got the later opening, they close, in the morning for a little while. Is that like an hour or so? But you don't get those gap plays. But when you start looking at things like value areas, that's when you could start doing some sort of gap analysis, right? And it's fascinating because a lot of the stuff that, if you've ever done any sort of research on gaps, right, you're going to see a lot of things that translate well into the order flow by using value areas and doing some gap analysis. So anyway, guys, I'll end it there. Be sure to subscribe to the channel if you haven't already, and hit the like button if you got something useful out of this video. And I'll catch you guys on the next video. Bye-bye.